What's up, traders? We've got another awesome episode for you today. So we've got a big group. It's me, Tom, James, and our special guest, Mike Lamothe. Now, Mike and our group cover a ton. We talk about his new book, The Trading Mindwheel, but we also go back to talk about where he got started in trading and some of the original lessons that helped him become consistent. So we're covering a wide spectrum of topics today. It's a jam-packed episode, so sit tight and enjoy. We're back, everybody. We're back with a new episode, a new year. We're really excited to be here with you. We've got Tom in the UK, James in South Africa, and today's guest, Mike Lamothe. Mike, you're in New Jersey, New York, correct? The Northeast.
Yeah, I'm in New York.
Nice. Awesome. So we're really glad to be here with you, everybody. We're going to be talking all about Mike's new book, Mike's trading strategy, the community he's building, his experience in markets, all of that stuff. We've got a ton of questions. So let's get right into it. Mike, tell everybody the title of this new book, if you don't mind, and tell them you said April it's due out.
Yes, it's due out in April. Book's title is called The Trading Mindwheel, the 8 essential skills required for trading mastery.
I love that, bro. I think it's such a unique title. And that was why when you sent it to me, I was like, this is going to do well, because it's not like day trading tips from Mike Lamothe. You know what I'm saying? Like, it's not like some boring thing that's just going to get swallowed up. So what is the mind wheel? Can you explain that, since that's a word that people probably have never heard before?
Yeah, totally. So the way that I view trading, I view trading as a wheel. Let's say that trading mind wheel. So the most important part of a wheel is the axle, the middle part of the wheel that's going to hold everything else together. And that at the center of that wheel is mindset, thus the name Trading Mind Wheel. There's many skills that are associated with trading. When I first went into trading, the one thing that I thought that trading was it's all about analysis. You put money in, more money magically pops out. That's how trading is, and that's all you need to know about trading. And I learned the hard way that that's not the case. When I started to learn about the other skills that are associated with trading, and we could get into as much of as you want, the mindset is interrelated to all of it. And so that's why I wanted to write a book, because there's plenty of books out there about psychology. There's plenty of books out there about analysis, trade management, what have you. But I didn't see much out there that linked everything together. And that's one of the reasons why I struggled for so long. There's many reasons why I struggled for so long, but that's one of them. And I wanted to write something that said that, hey, mindset is at the center of it all, and here's how it interconnects to all these other skills, and here's the skills that you need in order to be successful. Every successful trader that I've either studied or have personally met have had these combination of skills, and when one of them has when they've run into trouble, if the wheel has gotten a flat tire, then one of these skills has been missing or has been compromised.
Interesting. I mean, I think, Tom, you probably can relate to this wheel approach, right, with your Kaizen. I mean, look, he's got the logo in the background, right? You want to add in on that a little bit?
Yeah, so I think it's very sort of similar. I use a similar approach with the sign of the wheel, and like Austin's just alluded to in terms of the Kaizen, you go around that circle and that process over and over again. But I'm really interested to know that what are some of the sort of the key characteristics of them 8 pieces. And you said obviously the axle's the main one. Have you then got like spokes coming off that? Is like the 7 or 8 spokes coming off that mindset piece?
Yes, absolutely. And so I'll give you the 8. What I view as the 8 essential skills. And so the first is mindset. That's at the center. Then after that, I actually think that journaling is one of the most important skills, and I would argue that it's probably one of the most underrated skills or underdeveloped skills. After that, I go and discuss analysis. The reason why I would put journaling ahead of analysis is because if you learn about analysis and you don't know how to properly journal, then how are you going to be able to go back and look at your statistics and grow? So set that part up first, because it's going to end up saving you a lot of time. Had I known that in the beginning, I wouldn't have struggled for so long. So we've got mindset, journaling, we've got analysis. And then after that, I go into risk. And risk is also discussing position size along with risk. Then trade management. I look at trade management and portfolio management as two closely related but two separate items. After portfolio management, then I start to get into post-analysis, and then I get into testing.
I like it. Why do you consider, not to go too deep on one of the spokes, but why is portfolio management and trade management separate to you? Because I think a lot of people would see it as separate, not as the same. So can you just maybe elaborate more on why they are separate?
Sure. So how you're going to manage an individual trade might be different than how you manage your overall portfolio. We're in the context of portfolio heat.
Sure.
You could have multiple trades on that are risking a certain amount of capital. And then depending on the market environment, certain conditions, how your system is performing, you might be willing to either increase the level of heat, the overall risk exposure, or reduce it. Right. And that's the method that I've found to work best personally. And from the super performers that I've studied, interviewed, made friends with, they have performed similar.
You know what's funny, Mike? As you mentioned the super performers, I have to say, you filled out, so everybody listening, we do a little form that just kind of helps the guests prep for their questions. And we asked everybody, we always ask, what are you most confident in? Like, what aspect of your trading are you most confident in? And Mike said, all. That was all he said, all. So like when you talk about mindset, and I think mindset is extremely important. I think not just for trading, but for your everyday life. When you talk about mindset, I think it has to permeate into other areas of your life, not just trading. If you're a winner off the desk, you will be a winner on the desk. Would you agree, Mike?
Yeah, well, 100%.
So in that frame of light, how does a winner develop his mindset, or is it innately something that you have had your whole life and you've always been overconfident in yourself, and that's why you've made mistakes, but you've also found a lot of success?
I would never have thought that I'd be in the position that I'm in now if you had spoken to me 20 years ago. If you had spoken to me 10 years ago, I might have doubted that I'd be where I am right now.
So it wasn't something you were born with. You were not like in always super confident in yourself. It's something you've developed over time.
Exactly. Yeah. And that's one of the reasons why I believe that anybody that applies themselves and develops these core skills can be successful as a trader. I feel as though traders are made, not something that you're necessarily born with.
I would agree.
I think that we all may have innate talents, but it's a matter of learning how to leverage these talents and then develop certain skills. And I think that the skills that are associated with trading like that, there's nothing that's specific that I would say, oh, like you must be born with X, right? Like it's not like if you are say 6'7", you might be better at the playing basketball, unless if your name happens to be Muggsy Bogues, right, than the next person.
Right. No, that's probably, I think all three of us would definitely agree with you in that you can develop the characteristics that winning traders have. Most of us are not born with all of them, right?
I agree. And I think that's looking back through the 8 spokes to the wheel, the mind wheel. I think they're all very, very much required to build that. The one that I'm really interested in, because I'm a bit of a data junkie myself. I like it a lot. The journaling and the analysis. So from the journaling, you said that this is your most important one other than the actual mindset. Have you developed your own sort of journal, your own process, or do you use like a paid service? How has that process or that side of things developed over your career? Because I like to do a lot of journaling. It's something that we've brought into all of our trading within the last 12 months. So I just want to understand what that process looked like and what value you take out of that journaling side of things.
Yeah, absolutely. And to answer your question, I've done it all throughout my trading career. I've been trading now for a little over 20 years, and that's given me time to test out paper. I started out with a marble notebook and with journal in there. I went to and actually found the other day loose leaf binders with charts that were printed out and pasted in there with handwritten notes, all over them. And I would divide them into winning trades and losing trades, and then go back and start to analyze, well, what are the commonalities among these? I've done paid services. I had a spreadsheet for a time. Then I discovered somebody else's spreadsheet, and I said, well, I could either try to replicate what they're doing, or I could just pay the $100-200, whatever it was at the time, and get these tools. And then I switched to somebody else's service that was automated. I think I was doing Trader View for a little while. And then I came full circle and I started doing my own spreadsheets again. And the reason why I liked my own spreadsheets the most is because of the flexibility in them. If I decide that there's an extra piece of data that I want to add, just add a column. If I decide that there's some new statistic that I want to start to look at, just run a pivot table and here it is. Right. So I enjoy it for the flexibility of it.
The pivot table, throwing in some spreadsheet terms. Is that getting you going, Tom? I can see
it is. It is getting me going.
Cover something up under the table there. Don't get too excited now, Tom. No, but that's very interesting. I think that most traders probably are similar to you, Mike. I mean, at least I know I am, because I've gone through a bunch of different softwares and spreadsheets. We used to sell a trading journal. We used to use a different online thing. Like, there's been so many different iterations of journaling and doing that process. I think most people find eventually, just like in most things, you got to try a couple of different things, try a couple of different flavors until you pick one that you really like, and then you stick with it. But we are creatures of change in a lot of ways, where when you change and do something new, oh, this new spreadsheet, I love tracking again. I'm so excited about doing my journaling now because I got this new thing. And then you got to wait a couple months, and then it fades, and then you got to find something else new that keeps you excited to keep doing that mundane kind of task. I want to reference something that you mentioned there too, really quick. So, and this goes back to what you mentioned as well, Tom. In those successful traders, journaling being something that they all do, are there other characteristics, before we go off of this, Mike, are there other characteristics that really strong performers, really strong traders all have across the board? I know you mentioned the 8 spokes that they all have to have some dabble in and be able to do, but like, what are the internal characteristics? Is it self-motivation? Is it determination? Like, what words do you use to quantify that?
Well, another word about journaling before we move on. I think that it's an important characteristic for people to have in the beginning. The ultra successful traders, some of them continue to do it, some of them don't. For example, if you're familiar with Market Wizards, that book series, David Ryan does not journal his trades anymore. Used to, but he already knows his stats. He's beyond that process. So
transcended beyond the journaling.
Right. So for some people, right, and this is where to answer the second part of your question, I think that self-awareness is one of the most important things that anybody could have, whether you're trading or just for living your life. It's important for anything that you're going to be successful with. So David Ryan, in this example, had awareness that, you know what, my time is better allocated elsewhere than journaling at this stage.
That makes total sense.
I completely and utterly agree with that, in the fact that I think that was probably in the journal that we've created. There was a huge part on self-awareness in even as going as far as like tracking people's diets and their sleep, and just making them reflect on everything that can affect their trading from a process and a P&L perspective. And it was surprising how many people, when they reflected, actually realized how much their habits were being or bleed into their sort of trading.
Right.
And it wasn't until that self-reflection they were really starting to become more and more aware of that.
Yeah.
So it was interesting that you touch on that self-awareness piece as probably being one of the most important parts of journaling.
Yeah.
Interesting. So, are you guys doing mostly day trading?
Yes.
Or yeah, that I can see how something like sleep would definitely affect day trading.
Yes. More with your trading, you're doing swing trades, right, Mike?
Yes, I'm mostly doing swing trades. I have day traded. I was very successful with day trading, but I also came to realize how intense day trading can be, at least the style that I was doing. And when I started to when I got this opportunity to write the book and then to do some of these other things, I didn't have the time required to sit and focus only on day trading. So it's just like, okay, this is a great tool. I have it in my back pocket. Let me put it on hold so that way I could do this. And yeah, the focus that's required, if you're lack of sleep, if you're distracted, any number of things, you need to have the energy level and focus of NFL quarterback to be for day trading, I would say.
There's got to be a chart that someone has plotted, like the transition of a day trader into a swing trader correlated to the amount of hair that person has, or the color of that person's hair. You know what I'm saying?
Yeah, thanks a lot. I appreciate that.
No. It was a
He's speaking about me, Mark. He's speaking about me.
I'm talking about my friend over there. No, but you know what? I think it's a very interesting point too, just to go at it again. The lifestyle that you're looking for when you first get into trading sometimes is not aligned with the style of trading that you're initially introduced to the markets with, you know, and you have to learn how to develop self-awareness and adapt. I think that's another characteristic you probably say, right, Mike, for all these successful traders, they adapt and they're self-aware to say, hey, I could make money day trading, like you said, but I'm going to go do something that actually is more conducive to me feeding my overall life goals, my bigger lifestyle goals. Because what really drives you, Mike? Is it to make money trading, or do you have a bigger vision? Do you have a bigger purpose in life?
Much bigger purpose in life than trading and money, of course. For me, I wanted freedom for my family. Growing up, that's not something that I had at all. And so something as simple as being able to pick my daughter up at the bus stop when she comes home every single day. That to me, that's important. And being able to have a job like this where I'm working from home and I can go and do that. And I have the flexibility to take any time off that I want for as long as I want and not have to worry. Those are things that are very important to me. But if those were the only things that were important to me, and I said, oh, you know what? Trading checks off a lot of these boxes. Let's go try that out. Then I'd run into problems. Yeah. Because trading, while it checks off a lot of boxes, is also something that's very challenging. So I think that there's something to having an affinity for trading in and of itself, right? Like why trading? There's plenty of other ways to make money than that check off those boxes other than trading. So why trading? I enjoy trading quite a bit. To me, it's one of the funnest games in the world, or at least of the ones that I've played. I see it that way.
Totally agree.
Yeah, no, Mark, I resonated a lot with you. You post quite a lot on Instagram and on Twitter. Those pictures of like, remember why you trading? And it's like you hold. Well, I don't know if it's replicating you and your wife, or holding your child, and instead of having like a Lamborghini or something like that, right? So those pictures always resonated a lot with me. I think obviously we're all trading for money because money gives the freedom, but it's actually, you know, there's a bigger purpose, as you mentioned.
Yep.
Right, exactly. Money is absolutely important.
Exactly. You got to pay your bills, but James is trying to get those hair implants. So like the big
yeah, exactly.
Come on, you know I got to make the jokes, bro.
Yeah. But I also wanted to ask, yeah. But so Mark, I'm funny enough, I'm only 25, turning 25 this year, 24, right? Even though I'm bald and need the implants. But yeah, so you've been trading for almost as long as I've been alive, right? And in your 23 years of trading, I think everybody thinks that trading as a career or as a living is very much like an upward trajectory, right? Whereas it's not. I think Tom Canfield speaks a lot about this on his podcast that he's been on. Has there been a specific incident or episode in your trading career where you really doubted yourself? Maybe you lost a lot of money on one trade, or you went through a period of drawdown, and you didn't think if you could do this, continue to do this with the stress that it can bring.
Sure, there are plenty of times. It took me 10 years before I finally gained any level of consistency at all. And for much of those 10 years, I was like, you know what? Screw this. Trading's not for me. And then I would come back to it and then, blow up again and just be like, screw this. And it was that kind of back and forth relationship for years. Let's see an example that I could give you. Here's an example that came right after my wedding of a blow up. This is a good story. Well, Melissa wasn't aware of it at the time, but she is now, so she's allowed to watch the podcast.
Yeah.
So we get married. It's April 30th, 2011, and we are getting ready to go on our honeymoon. We're leaving on our honeymoon that Monday morning and flying to Hawaii. Before that, I was trading silver, and I had gotten into the silver trade back in February, and it had this incredible run. It was up about 60% before I left on my honeymoon. I'm like, this is great. Everything's fantastic. The wedding went off perfectly without a hitch. This trade is going to basically pay for the honeymoon. And so we have a fantastic time. We fly back, and I check my account, and the first thing that I notice is, I didn't set a stop loss. And I didn't raise a backstop or set up any of this. So my 60% gain turned into a 10% gain in the 2 weeks that I was gone.
Wow.
And I learned the hard way to have a going away plan for your trades.
That's a really good lesson. I think it's funny, and it actually ties into what you said as one of the areas of improvement that you're looking to make even still, Mike. It's in your scaling out, in your taking profits. And what it sounds like that was, and I talk about this all the time, Tom knows where I'm going with this, the Peter Brandt stuff, the popcorn trades, where you let the trade go up into profit and you don't end up getting out of any of those profits until it's all the way back to your entry almost. And those Peter talks about in the New Market Wizards book, just avoiding popcorn trades will help you improve your profitability a ton, because so many traders make the worst mistake than you, Mike. At least you have the excuse of you were on vacation. Most guys will sit there and watch that trade every day and still not take profit, still not raise their stop loss because they had it in their mind that it had to go X amount further or whatever it is. So what, from that lesson with the mistake at the trip, what did you do when you came back, other than, of course, have a plan for going away? Did you adjust your take profit, like how you were taking profit?
Well, what I did, the first thing that I did was I'm going to have stop losses in and double and triple check that my stops are in. I also am going to figure out how am I going to progressively raise my stops. At what point should I be raising my stops? Should it be based on technical? Should it be based on some kind of moving average? Should it be based on support levels? Should it be, and this is more of what I'm doing now, it should be results based. So, what's results based mean? It means that different market conditions are going to yield different results. If you're playing by the same system, same rules, then and you're taking the same setups, trying to keep as much constant as you possibly can, then the variable is going to be the market condition. and different market conditions will produce different results. So then it's up to us to have an awareness of what type of market environment are we in, and how can we adjust to that market environment, and how quickly can we adjust to that market environment. So having mechanisms in place where we are reviewing results on a regular basis, monthly, quarterly, over a certain number of trades. I like to look at blocks of 10 trades because in the current environment for stocks, I haven't been trading a whole lot. I only like to take what I consider A-level setups. And if I don't find these A-level setups, then I'm not going to even bother. So it might be 2 months where I only have a total number of 10 trades.
Yeah, I think we probably all can relate to that, especially James. I mean, Tom as well, but we all are very selective in our day trading. So I think that that's probably something very parallel, no matter whether you're swing trading or day trading. Most good traders would tell you that they are not trying to take a lot of trades. They're trying to take high quality trades. Was that something that you always were thinking, Mike? Or was that like 10 years ago, I made this switch and I stopped trading the shitty setups and my P&L?
No. It was not an aha moment. Wave the magic wand or rub the genie lamp and then boom, great trader. No, that it was a very long and continuous process, and that process is continuing to this very day. Yeah, I think, and again, another thing I've heard from all of the people that we've spoken with, because I've had Steve Burns on, we've had Crudelli on, we've had some really Tom Basso. They all say the same thing. They all are still students of the market. They're all still students of the game. No one on top says, I'm the best and I'm killing it and I'm going to be the best for a long time. The people who say that, they never stay on top very long. But the people who approach the game of like, I'm going to grind, I'm going to continue to do better. Even in sports, look at LeBron. He just turned like 50 years old and dropped 47 points on his birthday, right? Isn't that true, James? He's just had some big birthday and he dropped a bunch because he's a student of the game. He didn't just rest on his laurels, winning a bunch of championships to be like, I'm the best, I can stop now. He's still in the gym. He's still in the rehab. Yeah. He's still doing that day-to-day grind to make himself try to be 1% better,
Yeah. Mark, there was, so just on that and focusing on, the processes of the grind. There was one photo also that really resonated with me. So it was a photo that you posted. It must have been maybe about 1.5 years or 2 years ago, but it was a basketball player at the free throw line, and he wasn't looking at the basket. He was looking at the scoreboard. And your caption was, how can you produce great results if you're looking at the scoreboard? You need to be focused on the game. Can you maybe elaborate how can you not look at the score, your P&L in trading terms, and continue to stay focused on your processes without continue looking at your P&L through day to day?
Yeah, totally. And that's an amazing memory. I'm very impressed and very flattered that you would remember this post from 2 years ago.
Yeah, Mike's graphic game is on point.
Mike, your graphics are good. That's why they're memorable. Like you have a unique brand,
Thank you. I appreciate all that.
Yeah.
So, how can we focus on process and not our P&L? It's a very good question, and it's one that I grappled with for a long time too, because the fear that I had was that, okay, if I don't focus on the P&L, I'm just focusing on process, maybe I might be facing west and I'm continuing to face west and I'm just focused on facing west and I'm trying to see a sunrise, right? Yep. It's never going to happen. So at some point, there has to be a point where we are looking at the P&L. I would equate it to like putting an address into a GPS. If we put an address into a GPS, we'll be able to be guided over, around, and through on how to get to where we go. And that's our goal, right? Put the address in, GPS guides us there. So when we're driving, how much time are we actually spending looking at the device? No, not much, right? Like maybe 1%, maybe 0.5%.
Right.
That's what I think that the P&L should be. Like, it's not that it shouldn't be looked at all, but it should be looked at purposefully. And I think that where people get into trouble is when they're looking at it for entertainment purposes. And I would say that the same thing goes for looking at charts in the middle of the day.
Yeah. No, that's a great point. I love that analogy a lot. I'm going to steal that and give you credit, but I like that a lot. That's a good one.
Yeah,
I love
absolutely.
trading analogies because they're so relatable. And to your point, it's like you look at the GPS before important turns, before important moments in your journey. Same thing for your P&L. What are important moments? Like Tom, I'm sure you're thinking of a couple. What are great moments you should review your P&L? End of week, end of month, end of quarter, right? End of year. Yeah.
No, I love that response, Mark. I think, because we still have to keep track of what our P&L is doing. Otherwise, we don't know where we are, but maybe not on a day-to-day basis. And as you say, for entertainment purposes. So there's another question that I had up here. So in your experience, right, because you've got 23 years of trading, predominantly stocks, right?
Yeah.
If that's correct.
Yep.
I'm sure you've tried a host of different strategies and methods. Has your strategies and methods been predominantly going for high win rates with maybe a 1-to-1 risk reward ratio or a 2-to-1 risk reward ratio, or what has worked best, or has your methods been maybe going for a lower win rate, maybe such as 50 or 40% with a higher risk reward ratio? What has worked best for you over your 23 years of trading?
Yeah, great question. What's worked best for me is building in as much failure as I possibly can into the system. So what does that mean? That means that I don't want my success to rely on how well I'm going to pick a stock. I want my success to be more dependent upon how well I'm able to follow and execute my system. So if I'm able to have a 2-to-1 reward to risk, and if I'm able to have a 50% win rate, a 40% win rate, then I could just flip a coin and come out ahead. And the math is going to work out. I would prefer that than a system that, and if I do get, if my stock picking ability improves and I'm getting 60, 70, 80% win rate, then I'd rather that be the icing on the cake than the requirement of the system.
Yep. I like that answer a lot. I've actually never heard it phrased that way, but I like that answer a lot. Yeah, it makes sense. I mean, there's a lot of traders, Mike, that they either try to go high win rate and they go like 1-to-1, 1-to-2. They want to win 8 out of 10 trades. Or there's some guys who have the mindset of like, I'll lose 7 trades for that one big winner. When you got into trading, where were you on that scale of like I want a higher win rate, or I want to just win big?
Well, when I first started?
Yeah.
Well, when I first started, I just thought, hey, you have some money, you put it in, more money magically pops out the other side.
ATM, instant ATM, right.
Yeah.
No, go ahead.
No, I was just going to say that's I learned the hard way after about 3 years. I learned that that's not the case at all. No. But my story about when I first got started, I didn't even know where to buy stocks. I thought that you do it at your local bank because they had a little financial kiosk. So right. I walked in and I said, "Hey, I have some money. I had saved up $5,000 at the time. That was in '99. To me, that was a lot part time." And I was just like, "Hey, I want to buy some stocks." I didn't even know what stock I wanted to buy. I just want to buy some stocks. Whoa, kid, you don't want to do that. That's risky. What you want is this. And they show me their list of mutual funds. Right. And so I take this stack and I go over it and I sit down and I start flipping through the stack. And the manager eventually walks by. He's like, "Hey, kid, what are you doing?" "Oh, well, this other guy handed me that." Nobody reads those. Oh, okay. I guess I'll take this one, and this one. And it was a couple of stock funds, a bond fund. And I thought that, well, I'm being smart. And in a way, I was being smart in taking their advice that I didn't know what the hell I was doing. I had no business buying stocks yet. Right. So somebody else managing it for me, in this case, would have been a better decision. So there was that part of it, right? So I had the pros managing it for me. I had loads of diversification, mutual funds, 100 or so stocks in each one, and lots of time on my side. I wasn't planning on taking this money out until I graduated from college. So I graduate in 2002. I go to check my account. I didn't have my account didn't double, it didn't triple like I thought that it would. I had less money than when I started. And I'm like, how the hell did this happen? I had the pros, I had all the time on my side, I had the diversification. Oh, what the hell? And so I learned the hard way.
Yeah.
Even if you are not planning to trade for yourself, I think that there's a certain level of skill required before you hire somebody. Because if I had that certain skill, like if I'm walking in as a completely blank slate and I say, here, take my money, then how is that going to end in most cases, right? You need a certain level of education to be able to hire the right people to do the jobs for you, whether or not you want to do it for yourself. So maybe you get to a point where you learn about the skill that we spoke about earlier, journaling. And maybe you're like, you know what? I've learned enough where I can now outsource this part of my trading to someone or something else. And you're able to see if it's good or not. If you don't have that knowledge, then you're kind of screwed.
It's a great point. That's really another good point. I think about all the people who I know who have done similar to what you're talking about. Maybe later on in their life, they've gotten, they have a regular job. They're looking to diversify their extra income. They're the people who, at least again, like the high earners, the high achievers that I've been around, they will hire a money manager, but they'll still look at the money every day and see what decisions that person's making every day and apply their own knowledge, like you're saying, and make sure that it's sound. So I think that that's spot on again. Now, I want to kind of stem off of that for a second, if we can, Mike, not to go too far off the book, because I do want to come back to the book and stuff before we finish. But I want to definitely make sure we touch on, for the listeners, your experience trading and working a full-time job. You just mentioned a story about when you first got into trading, you were really young. And then, like you said, it took you 10 years to really start to find consistent results. So you were working while you were trading. So first, can you speak on balancing work and trading and life and family and all the other fun stuff that you like to do? Like, what was it like to use your time as wisely as possible? Maybe even give us some applicable like tactics on, like, hey, if you're a new guy, do this and you're going to time manage better.
Sure. So there were a few different things that I would say that helped. And part of it too is that you're going to need to sacrifice. You're going to need to sacrifice somewhere. And what I ended up sacrificing was lots of entertainment, particularly at night. But I'm also a guy that, I found something that I really enjoyed, and I had, it wasn't a chore to be like, okay, I'm going to study this, right? Like, this is something that I actually wanted to do. So there was that element of it. I did studying on my commutes. I did studying during lunch hours. I did studying on nights and on weekends.
Did you adapt your trading differently? Were you swing trading more then, or were you day trading while you worked?
That's a great question. So now I'm only going to talk about the points from when I started to gain consistency, because it's from there where things started to click and I started to evolve. Like the parts where I was trying and failing, like that, I was working then too, but I don't think that part is nearly as helpful as the part where I started to finally gain some momentum and success.
Sure.
So, part of what helped in that case was getting other people that knew what they were doing around me. And I started to attend. There was a meetup group in New York City where we would just meet in person. And it was the Investors Business Daily meetup group. I don't know if your audience is familiar with Investors Business Daily, but it's a newspaper, kind of like the Wall Street Journal, but they have a very specific methodology that they're following. And they had meetups all around the country, some internationally, and people could get together and discuss. the system. I discovered that, and I was instantly floored by the level of presentation that I would get once a month for 3 hours once a month. And it was run by a hedge fund manager and a couple of full-time traders. And then there were a bunch of people in the audience that were various skill levels and some new people like myself. Well, not new, but new to this particular style and methodology. And so what was so useful was being able to see that, oh, you don't have to go exactly by the book. Like, they're custom tailoring the methodology to fit themselves.
Right.
And in seeing that, I was able to see all the different ways that people were doing it. I was able to bounce ideas off of them. And then most importantly, to trade well and to trade well part-time, I was able to figure out ways to take what these guys were doing full-time and to only take the parts that were essential, that would allow me to take what they were doing in several hours and condense it down into half an hour once a day, and then maybe an hour or two on the weekends.
Yeah, that's impressive.
Thank you. I appreciate that. And well, after a year of doing that, and I went back to them and said, "Hey, thank you so much for the past year. I've learned a lot. I finally had a profitable year, and here's what I'm doing. What do you guys think?" They invited me to be a leader of the group, and they said that they wanted to adopt some of what I was doing, and that part floored me because you're a hedge fund manager. You have all this years of experience. Why the hell would you want to do what I'm doing? But
that's so interesting. But I think, again, it's impressive. But I'm sure you would say now the hedge fund guys are much more restricted in what they can do when it comes to even the amount of trades, the frequent. It's all many eyes on them. There's a lot of pressure. There's a lot of regulation. There's a lot of loopholes. Big. You can't move a market. Where when you're like a guy like us on the retail side, you have a lot more freedom. Wouldn't you say?
Oh yeah, totally. It's like you have a cruise ship and you have a jet ski.
Right.
Like we're the jet skis. We could outmaneuver the cruise ship all day long, and that's our advantage. Right? Yeah, we're small, but we're quick. We could enter and exit on a dime.
Right.
We should be leveraging that.
Exactly. I think you have to. Right. That's exactly it. So, what advice would you give to somebody who is working a 9-to-5 right now and learning how to trade?
Focus on what, figure out what any system that you're going to go after, whether it's a day trading system, a swing trading system, whether you're trading stocks, forex, crypto, what have you. Yep. Any system must match these three things in order to work, or else you're going to run into big problems. Your system must match your beliefs, your goals, and your ability to execute. If any one of those three are missing, you are going to have big problems.
Okay, so I love that answer, but I got to ask another question on that 3. So what if your beliefs are way not in line with your ability to execute? How do you solve that? Because I think that is the hiccup that so many people have. Their beliefs and their confidence and their self-talk does not align with their current ability. So how would you work to improve that?
I'm glad you asked. So how do we bridge the gap between...
Bridge the gap.
Yes. So the first thing that we want to do is to figure out what our goals are, gain clarity on our goals. And our goals are our monetary goals, our trading goals, how much time do we want to spend, all the different things that are, all the different goals that we have for trading, gain clarity on them, write them all out. And we actually have a tool that can help with this that's for free. I call it the Trading Mind Decoder. Okay. So gain clarity on your goals. Then after that, you want to gain clarity on your trading beliefs, your money beliefs, your beliefs about yourself, all these different kinds of beliefs. But those 3 primary types of beliefs, I would categorize them as. We all literally have hundreds, if not thousands of beliefs. And the more clarity that we can gain on what our beliefs are, then the easier it'll be for us to see which sets of beliefs are leading us closer to our goals and which ones are not. I look at beliefs as our internal programming, our software. And if, just like a computer, if we haven't taken a look at the software that's been running in the past 20 years, then it might be slow and clunky and might not work with today's environment. So it literally pays to go in, see what our beliefs are, and then start to say, okay, this belief is helping me get closer to the goals. These ones aren't. Where did this belief actually come from? If this belief is not serving me anymore, can I let this belief go? And
so true. And I think even more today, people don't know or don't take self-audit often of their own beliefs. They're influenced by a lot of people on social media, on the news, and everything that we consume. We're on our phones 10 hours a day. Like, all of that is influencing the way you operate and believe things about the world. You know what I mean? And people are not taking inventory, especially today. We know with all the political and social issues we're dealing with, not just in America, around the world, people are not auditing what are they consuming? How is it shaping their beliefs? And how is that then shaping the way that they act and interact with other humans and in our relation, in our trading? You know what I'm saying?
Yeah, absolutely.
Yeah. Great stuff. Great points. Tom, I know you had a question that we didn't get to that you wanted to circle back about the book.
Yeah. So one of the points that resonated or that I want to ask about is you mentioned it was 10 years. So the first 10 years you were struggling, you didn't, then you managed to try and find a little bit of consistency. So a couple of things. What was sort of the aha moment in terms of that? Like, what was the thing that said, right, and it started to click? Because it's a little bit like driving. It just seems really, really complicated at the start. And then all of a sudden, like, it all clicks into place, you know, where the clutch is, the gear levers, the indicators, and you can do it, all the mirrors, and it just slots in, and then you're okay and you're away. So then I want to link it back to the book in terms of, is this talking from your experience and the things and the processes that you have come across through your 23 years as a trader that you wish you told yourself or you had at your disposal back at the start of your journey? And would that have helped your 10 years of trying to navigate through trading?
Yes. So great questions. Let's answer the first question that you said had to do with more of when did I turn the corner and starting to have some of those aha moments when I finally did turn the corner after 10 years of struggling. Part of it came from first finding a system that really made sense to me, and that system was O'Neill's system. William O'Neill, the founder of Investors Business Daily and author of How to Make Money in Stocks. I read that, I consumed it, and I studied it like it was a grad school course. And I must have read that book at least a dozen times. Wow. So I found that, and at first I thought that I'm going to treat this like a cookbook and do everything to the letter exactly how Bill did it. What I failed to realize at that time, because I didn't have a mindset mindset, I guess, is there for everybody, whether you're aware of it or not. And for me, I was unaware. And so the problem that I ran into was I was not comfortable with Bill's money management. Even though it made him a fortune, I wasn't comfortable with seeing a stock go up 100, 150, 200%, and then seeing it consolidate for 8 weeks at a depth of 25, 30%. That I was not comfortable with that at all, because the ones that go up that much are far and few between. The ones that go up 25, 30% are a lot more common in his style. But if you don't lock in gains, those can also end up being round trips. And I didn't like that. I didn't like that sitting through it. I liked turnover. And so when I started to meet some of the other people in the group, and this is why finding groups that you can interact with, people that are of a similar mindset, that are trading in a similar way, that are also getting after it. That's one of the biggest hacks. And one of the things that held me back for so long too is that I thought that the hacks were a hack, like, oh, like that's a bunch of hacks, like get out of here, like a negative connotation.
Right.
So being distrustful in certain ways, and so yes, and there's a healthy skepticism,
right,
and there's an unhealthy skepticism.
Right. There's skepticism and there's cynicism.
Yes. Very well said.
Yeah.
And I unfortunately was the latter.
Right. Same.
And I and that was something that held me back for a very long time.
So does that come through in the book? To Tom's last question, does
yes.
the book, because I had the privilege of reading it, so I'm setting up this question for everybody. But everyone's going to read it in April when it comes out on Amazon. But tell us how the book kind of teaches from the 10-year period of mistakes?
Yeah. So it tells a lot of my personal journey. It shares the journey of some of my clients. It shares some historical journeys as well.
Yep. You mentioned Livermore in there a couple of times.
Yep. So there's a lot of things that there's things that I wish that I had learned earlier on in the process. One of the people that got to read the book early too, Mike Webster, who is one of O'Neill's portfolio managers and one of my early mentors. He was also one of the senior guys at Investors Business Daily. I gave the book to him, and in his review, he said that this is one. Where was this book 27 years ago? Okay. Secondly, he was saying it would be a great accompaniment for anyone who has read Livermore and has read How to Make Money in Stocks, and that just like brought tears of joy to my eyes. So like from like a guy like your mentor says something like this, it's very, very flattering. But that's how this was crafted with that in mind for those people, and I think that the book is applicable to anybody that's getting started. Well, you tell me. I'd love to hear your honest opinion.
Well, that's what I was just going to say. After reading it myself, I felt like, because I got to read it, Tom, I read it on my way kind of to London, but more on my way home from the London seminar. So I had plenty of time to peruse. And I found not only, this is a big thing for me, side note, it's very easy to read, Mike. It is not an overwhelming, like, I wouldn't even call it like 12th grade beginner college level. It's very, very easy to read. Like, it's built for somebody with, I think, like basic high school, middle school education can read this book and understand it. And for me, that's a huge aspect of it. Like, if it's not laid out in a way that I want to consume it, it will not stick in my brain. And I think a lot of people are like that. So that was the first thing. But I was going into it thinking, okay, this is going to be a mindset book. It's probably not directly applicable with like technical stuff that I'm doing in my trading, but it was like, there's actual tactics in it that no matter what market you're trading, I'm not going to tell everybody what's in it, but you can take stuff like direct stuff out of the book and start using it in your trading, which I think most books, especially in our industry, lack. Most books in our industry are fluffy, very fluffy. And you've got to comb through it to find that 6 sentences of value. You know, I really, and I'm not just saying this, and this is why I wanted you on, Mike, the book is laced with value. You mentioned stuff about Livermore that I didn't even know. So I found that there was like, even in the stories, I was able to relate because it's like, oh, this is new information to me about someone that I'm already connected to. But I think what the book showed me most about you, Mike, is that you teach through experience. You don't teach about something that you don't even write about something that you haven't felt yourself. That's very evident. And I think that that's the biggest thing, because when you're learning from somebody, what is the old saying? People buy people. They don't buy product. If you can't relate to the person, you're never going to get your message across the right way. And I think because you have so much experience, you're super relatable. Whether you're someone like me, who I'm on my 7th year of trading, or you're somebody who just started, like, your experience is you're getting to that point where they're going to have to put you in a new Market Wizards book. You know, you're getting up there now, Mike. But I think it is very cool to have people that are come from the O'Neill school of thought give you that kind of compliment too, like your previous mentor, Mike Webster. And I think look at like Richard Moglen of Trader Lion and all those guys. A lot of them push the William O'Neill style of investing and trading. So I think the O'Neill school of thought is relatable, which is going to make this book very relatable to a lot of listeners. You know, crypto guys, stock guys, options guys, like there's 100% value for all of them in it. 100%. Yeah.
That's great.
Yeah. So listen,
thank you.
Absolutely. Boys, I think this is a great spot for us to wrap up. That was a quick hour, but I think we're good for here. So listen, everybody watching, we appreciate you. Everybody listening, we appreciate you as well. Make sure you go to the links in the description. I'm going to link to the book when it's out. I'm going to link to Mike's website, his social media handles, all of that stuff, so you can follow him. We recommend that you do. We gave Mike a lot of praise today, but we didn't say enough about his social posting because it's a ton of value. The Twitter, and I mean, especially the Instagram graphics, Mike kills it. So make sure you're following him there. You'll be hearing all about the book when it comes out. Maybe I'll be even featured in the book as like a highlighted review if I'm lucky. And I think what we'll have to do, Mike, is come back once the book is out and we've gotten feedback, you've gotten feedback, and we see it at the top of the Amazon list, and we'll have to come back and do another episode then to kind of like follow up and see what people want more of, you know, because I'm sure your brain, as you've been writing this, Mike, you've been like, all right, now in the next book, I'm going to talk about this, this, and this, and I'm going to go into detail about this. Right?
Oh my goodness. Yeah. You know, a blog post can easily turn into a book. That's something that I learned with the first book. And now after writing this one, I'm learning that one book can easily turn into a series.
Exactly. So we'll have to come back for a future episode, Mike, but this has been great. I appreciate you being on. James, Tom, I appreciate you guys as well, bringing the heat, bringing the questions. So for everybody listening, watching, thank you very much. Have a great week with your own trading, and we'll see you guys all in the next episode. Thanks, everybody.